Most foreign nationals could buy their first home in the UK years earlier than they think. The issue is that they just don't have the right information, but today we're going to change that. In this video, I'm going to tell you everything you need to know about buying your first home in the UK as a foreign national. When you're looking to buy your first home in the UK, it is so important that you understand the process and that you have the right source of information. There are so many different steps when it comes to buying your first home in the UK, and it can really be difficult to understand where to turn and what to do at each stage. Having the right information before you go into the process can make the difference between making costly mistakes, waiting years longer than you need to buy, or simply getting into your first home and starting to pay down your mortgage and enjoying that family home. Now, before we get into this video, here's a bit about me and why you should actually listen. Now, I'm a foreign national specialist mortgage advisor, and I've actually helped over 300 clients through the home buying process. I work mainly with clients who have moved to the UK within the last 5 years to buy their first home here, and I do this because I love to help newcomers to the UK to help them establish themselves here and feel at home. Moving to a new country can be extremely difficult. I know this through speaking with my clients and understanding their experiences in coming to the UK. Buying your first home can be such a massive part in feeling more at home in the UK and having that sense of community here. And this is exactly why I want to help more people to be able to do this in the UK. And I hope that this video really helps to give you the right information in doing so. Of what I love about what I do is having such a measurable effect in people's lives and being able to help them get past that barrier to buy their first home, even if they've been previously told that it's not possible. On the screen are a couple of my recent reviews from clients. Most of them have been told by either their bank or another advisor, or maybe just a friend at work, that they couldn't buy in the UK yet because they haven't been here for 2 years, for example. And this just commonly isn't true, and this is what I'm going to take you through in this video and in a lot of other of my videos as well, to give you the right information and give you hope that maybe you could buy a lot sooner than you first thought. Now, when it comes to buying your first home in the UK, really there's 4 key requirements for understanding the eligibility. Now, I'm going to break these down for you very easily. So, firstly, you have visa and immigration status requirements. Now, really, when we're looking at this, we're looking at how long you've been in the UK. So, if you've been in the UK for less than 12 months, then you will only be able to buy with a 10% deposit, and there won't be many lending options at all. Currently, depending on your income and a few other factors, there's between 1 and about 3 or 4 lenders as I make this video. Once you've been in the UK for more than 12 months, especially if you've got more than a 5% deposit, so 10% plus, then there are a lot more options available for you to buy your first home here. Another important point to consider about visa and immigration status is the type of visa that you're on. Typically, we're looking at skilled worker visas, health and social care visas, and graduate visas. These are all completely fine. Of course, if you're on a spousal or dependent visa on someone else, so your partner has the skilled worker visa, this is also normally completely fine as well. The second point that we look at is your deposit level. So for your deposit, as I've already mentioned, you'll likely need at least 5% deposit, and it can be a lot better if you use a 10% deposit because you'll get access to more lenders and you'll also get access to cheaper interest rates as well normally. So this can really help with affordability and just making sure that your monthly payments aren't too high when you move into your new home. So using a 10% deposit, for example, instead of using a 5% deposit. Now, when it comes to the source of your deposit, this means where your deposit has come from. So if your deposit has come from your home country, wherever you've moved to the UK from, then the important thing is when going through the process with both the mortgage lender and the solicitor is that we'll have an easy trace of where this has actually come from. So if, for example, it's come from the sale of land or property, then it would be making sure that we've got the right documents to prove this, prove the sale, and then show that the money's come from the home country all the way to the UK. If this money has been saved up in an account from working, then this can be quite easy to prove, and some lenders might just need 3 to 6 month statements to prove the build-up of those funds. Typically as well, your solicitor will want to verify this. It can make it slightly more difficult, but it can be acceptable as well. If your deposit has simply been built up in the UK, then this is very easy, and we would just look at savings proof in the UK. Now, when it comes to mortgage affordability, this has a couple of factors involved. The two main ones are income and expenditure. So we're normally looking at your household income. So if there's two applicants, then we'd be looking at both of your income. And then commitments and expenditure will come into this as well. The commitments and expenditure that get factored in are credit commitments such as credit cards and loans, any dependents, so children or a partner that isn't working, and also other committed expenditure. So that could be things like childcare costs. Typically, you will get between 4.49 times up to about 4.75 times your household income as a lending amount. Of course, this does depend on other factors, so this isn't a hard rule, but this is a general guide about what's possible. Some lenders, however, and this does depend on your deposit level and income level as well, can give up to about 5.5 or 6 times the household income as a loan. Now, when it comes to credit scoring, this is such a big part of the process, and I really commonly get asked, is my credit score good enough? With credit scoring, it's not just the score that matters, it is the whole credit profile. And what I mean by this is, it's not as simple as just looking at a number on your credit profile app and saying, yeah, you're able to get the lending. Typically, the only way of telling is by us going through the pre-approval or agreement in principle process. And this is because it does a soft credit check with a specific lender and then tells us whether or not you pass that. And this is also because it factors in things like late payments, any county court judgments and things like that. For you, it's really important to make sure that you've checked your credit report and make sure there's no issues on there and get building towards having a good credit score. I'll touch on how to do that a bit later in the video as well. So this is why it's more difficult as a foreign national to get a mortgage in the UK. And I'm sure you'll be able to understand this from a lender's perspective, is that if you're on a visa that says you're only in the UK for a limited amount of time, so let's take a skilled worker visa, and with it being 5 years, let's say you've already been here 2 years. From the lender's perspective, technically in 3 years' time, you might not be able to stay in the country anymore. Of course, the likelihood is that you'll continue in the UK, and if you're eligible to, then you'd get indefinite leave to remain. However, it can be a risk for lenders, and that's exactly why it makes it a bit more difficult, and not all lenders are happy to lend. However, I would say that more lenders are starting to come out and bring good criteria to the table for this, and the options seem to be opening up all the time. So it's important for us to keep an eye on the market and stay with it, because when new lenders come out, they might bring something new to the table, and we've seen this a lot in recent months with new lenders coming out with innovative criteria that can really help in certain instances with clients. Now, when it comes to preparing your finances, there are plenty of key areas to consider. The first is, of course, saving for a deposit. Now, of course, you'll need income to start saving, and obviously if you're working, it's important to start looking at how much money you're spending. If you're thinking you're not able to save for a deposit, and I appreciate it's a lot harder nowadays with the cost of everything at the moment, especially in the UK, it can be hard to save for a deposit, and I do appreciate that. It can be good to look at your spending and try and figure out if there's anything that you could cut to start building towards that deposit, because it will help if you're able to get into your first home. You could use things like savings accounts, LISAs, which is a lifetime ISA, and that is something that you can use to buy your first property in the UK up to a maximum value of £450,000. It's important to state that the account needs to have been opened for 12 months before you use it, but you can get large bonuses from the government on the amounts that you put in, up to about £4,000 per year. So that can be a good tool to help give you extra money and a bit of a boost towards your deposit. If you've got any foreign funds, I've already mentioned about being able to prove where this has come from and using it as your source of deposit. And potentially you might have access to a gift. And normally this is only acceptable if it's family that are gifting you the deposit. But sometimes if it's a friend that's gifted you something, as long as they're happy to sign it off as a gift legally, saying that they don't want any of the money back and they won't hold a legal charge, so they won't have an interest in the property, then this can be completely fine as well. When it comes to proving the deposit as well, it's important to say if you've got loads of money coming in and out of accounts, whether it's helping friends out or charity work and things like that, it can make it a little bit more difficult to prove, because if you're seeing lots of money coming in, lots of money coming out, it's difficult to understand whose money that actually is and whose money is going towards the deposit. A second point is building your credit score. Of course, I've mentioned that this is important as well, but how do you actually build it? Now, in the UK, it's really important to use credit to build your credit score. It's also important not to use too much credit. So I'd say definitely don't go getting 3 loans and 3 credit cards and using them all. It's more important if you had one credit card, for example, you used it for your shopping and then you paid that back in full at the end of each month. So you cleared the whole balance on time. That's the most important thing, is that you're paying on time and clearing the balance to make sure that you haven't got loads of outstanding credit with loads of different lenders. I say this because when you actually initially take out a form of credit, it can actually knock your credit score. So if you do that a few times, it could knock your credit score down quite far, and it might take a little while to build back up. Some lenders are stricter than others when it comes to credit score. So if you do have a bit of a lower credit score, or you've had a small blip, then it might not be the end of the world, and we might still have options available. Now, it's important to understand the additional costs as well, right? Because if you're aiming for a 5 or a 10% deposit, you also need to have enough money for the other costs in the process. So the main costs are stamp duty, land tax, which is the tax that's payable in England when you are purchasing a property. Now, of course, it's virtually the same tax, but it's called something slightly different in Scotland and Wales, and the rates at which it's payable are slightly different as well. So it's important to consider what the differences are. In England, you won't pay any stamp duty as currently stands with the stamp duty reduction at the moment, which we're in July 2024 at the moment. You wouldn't pay any stamp duty as a first-time buyer anywhere in the world up to a purchase price of $425,000. So for most people buying their first home, then you wouldn't actually be liable for any stamp duty. The second biggest cost in the process tends to be the legal fees. I normally say this is anywhere between around £1,500 to £2,000, depending on the property that you buy and the solicitor that you instruct. That budget there would cover all of the legal costs, so not just the solicitor's fees, but also the searches and all the other costs that are involved with the legal process. The next would be the mortgage lender fees. So typically this is about £999. That's associated with the mortgage product that we go for. It's a fee that the lender charges, and most of them do charge that. When we're calculating what the cheapest mortgage product is, we're factoring that in. So if that gets recommended to you by myself or another advisor, then normally that would be the best deal for you based on the total cost. You've then got broker fees. So of course, mortgage brokers charge fees normally, and depending on the broker, you'll get charged a different fee. But to use our fee that we charge clients is normally about £500. Then depending on the type of property you get, you may or may not want to get a survey. I'm going to touch on this a bit more later in detail, but if you do get a survey in place, then this would cost you about £500 all the way up to about £1,000, depending on the price of the property and the survey that you actually get. The other costs could be things like moving costs. So of course, if you've got a long way to go and you need to move all your stuff across, then that might be something to consider. And furniture, of course, if you need to buy that, then that can add up. If you're buying a new build property, then there will likely be a reservation fee involved as well, which is typically about £500, but it does depend on the developer. One of the most important things when preparing your finances is setting a realistic budget. And when we say realistic budget, this means a couple of things. One, it means a realistic monthly budget. And two, it also means a realistic property price budget. Now, realistic in this sense, meaning, of course, one that you'll actually be able to achieve, but also one that you're going to feel comfortable paying for later down the line. There's no point that we get you this mortgage, get you into this property, and then you're struggling with your finances later down the line because you've pushed yourself just a bit too far. Nobody wants to live paycheck to paycheck and really struggling. So it's important that we consider this and we walk through your finances and we make sure that we're getting the property that you want, but we're making sure we put you in a situation that you would also want as well. Finally, when it comes to preparing your finances, it is financial protection. Now, this is so important, and this is part of the process that a lot of people don't even think about or don't actually know about. Now, it's important to work with an advisor where their advice comes in two separate halves, and the first half being the mortgage. Of course, that's what's going to get you into your first home. But it's the second half of the process that for me is even more important, and that is making sure that you've got the right financial protection in place so that if anything unexpected were to happen to you, then you wouldn't be at risk of losing your home and not being able to keep up with your lifestyle. It's really important to make sure that you put yourself in a position where you can keep up with all of those expenses, the mortgage, your normal lifestyle, the bills, and so on. So this is also a side I always discuss with clients throughout the process, is making sure that you've got the right financial protection in place. And that is things like life insurance, for example. When it comes to getting mortgage prepared, there is a lot to consider. The first is the importance of long-term planning. Look, you're getting a mortgage now, but we don't want you to have a mortgage forever, right? One day you want to not have a mortgage because ultimately, what we're all doing is we're living a life where we're going to end up towards retirement, hopefully. I don't know about you, but maybe one day it'd be nice not to work. So you want to put yourself in a position where in 30, 35 years, whenever it may be, that you're not still having to pay this mortgage. This was an issue that was seen in the market quite a while ago, where a lot of interest-only mortgages were being done. And before, you didn't have to verify how that was actually going to be paid back. So there are a lot of people that are coming to retirement age now that have been stuck on interest-only mortgages and they still have a large balance to repay. And it is extremely difficult to sort that problem out later on. So it's important that we plan ahead and make sure that you have the ability to get that mortgage repaid and ultimately pay a lot less in interest and have more money towards your retirement. When it comes to the types of mortgages available, there's really two main types. Of course, there is a lot more than this, but the two main types are residential and buy-to-let mortgages. It is much easier to buy your first home first and then look at buying buy-to-let properties if that interests you, of course, to build a portfolio potentially. There's two main types of interest rates, and these are fixed rates and tracker rates. Fixed rate is normally the most common for clients, and that's typically because for most people, it's better to have the understanding of exactly how much your monthly payments will be for a set period. So to compare this to renting, it's like if you agreed a 2-year rental contract and your rent stays the same for that period, a 2-year fixed rate would be exactly the same in that sense. Your monthly payments would stay the same throughout that entire period. Whereas with a tracker rate, these typically follow the Bank of England base rate and they sit a small margin above it. So what this means is your interest rate could change up to 8 times per year. And of course, if interest rates go up, that could have quite a detrimental effect on your monthly payments and ultimately the amount of money that's left in your pocket once you've paid your bills. For most people, I'm sure you can understand that risk isn't best. Of course, it does depend what the market's doing as well, so we look into all of these options for you. It's also important to mention that with fixed rates, typically there are quite high early repayment charges, so it's important that we don't put you on a 10-year fixed rate, for example, if you're only looking to stay in the property for 2 years or 5 years. Now, this point is also coming back to the importance of long-term planning. So making overpayments on your mortgage is one of the best things that you can do to, one, reduce the mortgage balance faster, but two, save money on interest throughout the term. Now, I always go into this with clients on our second meeting is how much money they could actually save over the mortgage term if they made consistent overpayments. And this figure is always staggering. It's normally somewhere between about 50,000 all the way up to 100,000 plus in interest savings alone. I'm sure you can see why you would want to make overpayments to give yourself 50,000 or 100,000 pounds in your pocket for retirement that otherwise would have gone to the bank in interest. Now, we've discussed the mortgage eligibility and requirements, and that's the really 4 points mentioned. To recap those, that is your income or affordability, so income versus expenditure. Secondly, you've got credit score. Thirdly, you have deposit. And lastly, you've got residency status, so how long you've been in the UK and what kind of visa that you're on. A really important point as well is why you actually need a mortgage broker and how to find one. You need a mortgage broker because staying up to date with this market is difficult for me, and this is my full-time job, right? This is something I do day in, day out, and still the market moves very, very quickly. For you to be able to keep up with the market, make sure that you've got the best possible deal at all times, make sure that you're with the right lender, process the mortgage application, get a mortgage offer in place, and also take yourself through the whole home buying process alone, to me, just doesn't seem worth it when you look at the cost it takes to get a good mortgage broker in place. Let's say £500, for example. £500 for you to have a professional to not only guide you through the whole process and make sure that you're not making any mistakes, but also to take care of all of the work on the mortgage side and give you their expert advice. This is why it's so important. How to find one? You can always go online and look in your local area. If, as a foreign national, you want to work with an expert and a specialist in foreign nationals, then myself, as I said at the beginning, I specialise in helping people that have moved here in the last 5 years. So if that's of interest to you, then of course you could reach out and I'd be more than happy to help. The final point to get mortgage prepared is getting a pre-approval or an agreement in principle in place. This is also known as a decision in principle and a mortgage in principle. So don't get these confused because it's all the same thing. Now, what this does is it does a soft credit check with the lender, so it makes sure that the credit side is fine. What we also do is do a full document and file review, so we're making sure that there's no issues and that we're definitely going with the right option and that we're also looking at all the other options that we might have as well. So it's really planning ahead and making sure that there's not going to be any unexpected mistakes at a later stage. You can do one of these online and it will probably be a fairly quick and easy form, but I would definitely say get a professional to do one that's going to check your documents, that understands your situation and talks you through the options as well, because that is the majority of the value in that process. I would always say get the agreement in principle in place first before you start viewing. You don't want to waste your time starting looking at properties until you have that agreement in principle in place that I just mentioned. Let's say now you've got that agreement in principle in place, you understand the budget, you understand the options, you've got everything prepared. You can now start to look at finding a property. Finding a property is difficult, especially if you're doing it for the first time. A good place to start is by researching neighbourhoods and property types, so really getting to know what you actually want. So spending that bit of time up front to consider that before you go out and do viewings can be really, really helpful. Now, using property search tools and estate agents is probably the best way to go. So you've got Zoopla and Rightmove are two really good tools that you can use in the UK. So if you go on Google and type in Rightmove or Zoopla, you can then put in a postcode, set an area search, and you can look at properties in that area. You can also, of course, filter it by property price and other factors as well. If you speak to local estate agents, if you're looking to buy in your local area and you can register with them, you can tell them a bit about what you're looking for and they would be able to get in contact with you about properties that they have on the market that you might like as well. When it comes to viewing properties, you want to make a bit of a shortlist online first. So you should be building, right, okay, understand which area I'm looking to buy in. Hopefully they're all similar property types, and then you can build a shortlist and book in some viewings. It can be a good idea if you want to save time to book these in a bit of a viewings run. So you do one after the other, maybe with the same agent, and then maybe go see a different agent. You might want to take your time and only do a couple, and then the next week a couple. What you want to be doing is constantly going back to the shortlist, get rid of anything that you don't like, and then put more on there. So keep looking online. If new properties come to the market, because they always do, then you add those onto the shortlist and you can book in a viewing for them as well. Now, quite commonly, when I speak to clients, they've either got quite a firm preference whether they're going for new build or not new build. If it's not something you've considered yet, it's definitely worth having a look into these online. Normally, it does come down to personal preference. There are a few things to consider, and typically when it comes to the values of new builds, it's similar to if you bought a new car and drove it off the forecourt. As soon as you get into it, sometimes it means it can decrease in value. But that's just because you've bought a new property and then suddenly it's not new anymore. But this isn't, again, a hard rule. It really does depend on the type of property, the type of area. There are so many factors involved. And of course, what the market is doing in terms of interest rates as well. There are definitely pros and cons to both. So it's important to consider this. And maybe you'll just want to go for a viewing in each of them to see what you might prefer. I'd definitely say it's worth doing your research on the builder if you're looking at a new build property and making sure that they've got good reviews, people haven't had too many problems with them and everything looks fine. You're covered by the correct warranty. Normally NHBC is a very good warranty to be covered by, and also just making sure that if there have been problems with their developments, then those have been sorted out quite easily. Essentially, you want a really good customer service support after you've moved into the property, just in case there are any issues. Once you've actually seen a property that you like, you might want to go back and do a second viewing. Now, this is completely fine. You've viewed the property once. It's normally best to use that first viewing just to check if you like the property or not. Commonly, when you first go in there, you're probably going to go yes or no, whether you like the property or not. So, of course, if you do like it and you go home and you're thinking, actually, that might be a property I could live in, it can be worth booking in a second viewing. If you know anyone that is particularly savvy with property or understands the market, maybe they're a builder, it can be good to have them to go have a look around just to make sure that the property looks fine and there's no particular issues. What would come after a second viewing is, well, potentially making an offer, right? Because if you like the property after you've seen it a second time, you're ready to move ahead, you've got your deposit, you've got your agreement in principle in place, mortgage advisors ready, then you're thinking, actually, yeah, maybe I could make an offer on this. So the process of making an offer, now this differs from estate agent to estate agent or developer if you're purchasing a new build. Typically what happens if you're purchasing an older property from a standard estate agent is you'd want to mention to them either over the phone or via email that you'd like to put an offer forward. You could ask them what the process is with them, because this does differ. A lot of them might have offer confirmation forms. That's something that you need to fill in. Others might just ask for you to send them an email or tell them what your offer will be. Now, they'll have to put this forward to the seller, and then the seller will be able to come back to the estate agent on what they think about the offer. This can go a couple of ways. So, of course, they could accept your offer. So if you made an offer that they like, they might accept it. If you made an offer below the asking price, then they might come back and say, actually, we want this. They might just say, we want the asking price still. They might come back a little bit below as a counter negotiation. When it comes to negotiating the price, this really comes down to how much you like the property, how much interest it has, and if it's been sat on the market for a while. Of course, if the property's been sat on the market for a while, it's not got much interest, and the seller really needs to sell, then that could give you some power in negotiation. However, if you really, really like the property and you're not sure how much interest it's not been on the market a long time, you need to be asking yourself, if I decide to negotiate, how much risk of losing this property do I have? And how would that affect me? So if I really, really like this property and I mess around trying to negotiate and someone comes in and offers the asking price, are you then going to be really upset and think, oh, I wish I would have offered the asking price in the first place? So that's an important point to consider when it comes to negotiating on property. Now, the offer acceptance process is quite simple. So once you've had an offer accepted, the estate agent will come back to you. You'll have to give them some ID, there'll be some proof of funds verification and things like that. The next steps will be moving on with the mortgage and the insurance applications to make sure that you make a lot of progress. What an estate agent wants to see is confidence that you're moving forward and you're doing things quickly. Of course, if you have an offer accepted and then you don't do anything and the estate agent doesn't have a valuation or survey booked in a few weeks' time, they will start to get worried. So it's important, and this is something I do with all my clients, is make sure that I reach out to the estate agent, they know exactly what's going on, and they know that we're making progress. With a new build property, you would get a reservation form filled out, which would contain your mortgage broker's details, the solicitor's details, and the solicitor of the developer. It would also contain the property address, many other specifics, and importantly, the reservation deadline, which will be the date of exchange of contracts. Typically, this is somewhere between 40 to about 45 days. So it's important that you get moving ahead with the mortgage application swiftly. Now, when it comes to the mortgage application process, there's a few things to consider and a few things that happen at once. So really, you want to be submitting the mortgage application pretty swiftly. And ideally, you've got a mortgage broker in place that can get the up-to-date documents that they need. So of course, if it's been 2 or 3 months since you did the agreement in principle, and now you're doing the application, will likely need updated payslips and bank statements. Now, it's important to say that we'd also submit any other insurance applications at this point as well. So that might be income protection, it could be life cover and things like that. Now, the application process has a few stages. So when we initially submit the application, we'll be packaging documents to the lender. So this will be things like payslips and bank statements, proof of your visa status, your proof of ID, etc. The lender will then have an underwriter who checks the case. The timeframes on this completely depend on who the lender is and how busy they are at the time. Let's say, for example, this is 3 working days for the purpose of this video. The underwriter will review the case, they'll have a look at the application and the documents. If they're happy with everything, then they could just agree the mortgage subject to the valuation being completed, or they could come back and ask for clarification on a few points or additional documents. Now, I mentioned a moment ago the valuation, and if you're thinking, wait, what's that? It's fine, I'm going to explain. So the second half of the mortgage application process is getting a valuation done. Now, the valuation is typically paid for by the lender, so normally you won't incur a fee, and this makes sure that the property is worth the amount that you're paying for it. It is a very basic valuation, so the report that you may get, depending on the lender, doesn't actually state that much. So this is why still getting a survey done, if you're purchasing an older property, can be a good idea. And I'll touch on that a bit more later. Now, let's say the underwriters check the case, they're happy with the documents, they're happy with the application, it's all affordable. The valuation's been done, that has come back at the amount that you're buying the property for. Then the underwriter would check the case again, have a look at the valuation, and likely put the case to offer. So this is where you receive a full mortgage offer. Now, the full mortgage offer would be valid normally for a period of 6 months. So it gives you 6 months to complete within. And normally this is more than enough time because the average time length for the whole process from having your offer accepted on the property to moving in or completing would be about 3 to 4 months. It can be quicker than this, it can be slower, but 6 months from getting the mortgage offer is more than enough time normally. An important point to consider and mention here is that the mortgage offer that you initially get might not be the best mortgage offer that you could get throughout the whole process. And let me explain what I mean here. So let's say today we submit your mortgage application and we get you an interest rate of 5%, just to make numbers easy. So we got the interest rate of 5%. There's a couple of weeks of processing to get the mortgage offer. Mortgage offer comes out. Of course, it's for 5% because that's what we applied for. Now, what happens if interest rates in the market trend downwards over that 2 weeks or even over the couple of months before you exchange contracts potentially? Well, actually, you could still access the cheaper interest rates. And if you've got the right advisor in place, as I mentioned earlier on in the process, then they should be keeping a keen eye on what the interest rates are doing and updating you if there's anything cheaper and being able to go ahead and switch your mortgage offer to the cheaper offer. If it's with the existing lender that you've already got the mortgage offer with, typically this is a very quick and easy switch and you'd be able to get a new offer out in a matter of days. If this would be with a different lender, you would actually have to go through the whole process again. So mortgage application, valuation to offer again. And that would do a whole nother hard credit check. So that is an important point to consider as well. Now, the legal process or conveyancing, which is another word that you'll hear, can take quite a while. Now, a solicitor or conveyancer will be in charge of doing all of the legal work. So there's a couple of main points that they'll do throughout the process. It's really important to state as well, before I go into too much detail here, that it's so important that you actually get a good solicitor in place. And this is because they will control normally how long the process takes and how painful it might be. Because if they're really slow to respond, if you can never get hold of them over the phone and there's tight deadlines involved, it can get really stressful for everyone. So it's important to have someone that will be prompt to respond to you and that is good at their job. Now, they will actually deal with a few things. So they'll conduct the property searches, which there are a lot of them. To explain simply, that is like looking at the background information of the property. They go to different sources of information for that. So local authority searches, for example, is one of them. Now, they'll also do the inquiries. Now, inquiries will be your solicitor asking questions or inquiries to the seller's solicitor, and it could potentially be about things that are found in the property searches or other documentation. They'll also then draft the contracts ready for exchange, and exchange is that date that I keep mentioning, and I'll get into it in a moment about what exchange actually is and why it's so important. Now, before we actually go on in this video, I just wanted to give you the opportunity to get our free of charge ebook, and I've put the link in the description below for you to put your email in, and I'll be able to send you a copy of this. It's 7 things that you need to know as a foreign national before you buy your first home here in the UK. And if you're enjoying this video, I'll know you'll love it. So I'll put the link in the description below and get your free copy now. So I've mentioned surveys a couple of times, but what is a survey? And there's a few types. Now, under this bracket, I'm going to use the word valuation as well. So valuation is typically what the lender does, although you can get an independent valuation done, but let's ignore that for now. But a valuation is typically what the lender does that normally doesn't come at any cost to you, and that's making sure that the property is worth the amount that you're paying for it. The main types of survey are a level 2 and a level 3. There is also a level 1 survey. So level 1 is a condition report. It's the most basic type of survey there is. Level 2 is the home buyer's report. Now, this is typically what people go for, and hence why it's called a home buyer's report, because it will point out areas in the property that might have a lot of work that needs doing and that might be areas of concern and could cost you a lot of money. Now, the level 3 survey is a building survey or a structural survey. So this is typically for properties that need a lot more work doing, or if you're looking to do a lot of work to the property itself, then this might be something for you to consider. But for the majority of people, a home buyer's survey would be sufficient. Now, these are really important because if you're purchasing an older property that might have issues, the last thing you want to do is just go into it blind, buy the property, not even think about it. And then a couple of years down the line, you have this major issue that you could have found out about when you were buying the property for a mere cost of a few £100s, right? £500, £750. But instead it ends up costing you tens of thousands of pounds. It would be a nightmare, right? So this is why it's so important. You may need one if you're purchasing an older property. Typically a new build, you wouldn't need one of these, although there is a different type of report that you could get called a snagging report, just to make sure that the property is in good condition and has been built well. To arrange a survey, there's plenty of companies that can do it. I recommend my clients to a specific company. They're one of the longest standing in the UK. What to expect is that you would be able to hopefully speak to the surveyor before they go in about any requests or anything that you might need doing. They would then go to the property itself, have a walk around, they'll take some photos. You would then get issued with a report about their findings. So that will have some of the photos in it, a lot of their feedback and explaining it. As long as you've got a good company doing your survey, then you should be able to have the opportunity to speak to the surveyor over the phone again, just to ask any questions or get their feedback on it. Quite commonly, these reports will state if there are big issues that they recommend that you go and get a specialist survey done, and that would be by a specialist in that particular area, whether it be electrics or something else. Now here it is, exchange of contracts. I've mentioned this a few times and I said I'd get around to it. So what actually happens during exchange of contracts? Now, exchange of contracts, the easiest way to imagine it is 2 contracts and then being exchanged, right? So seller and buyer exchanging contracts. Now, what that means is all of the legal work has really been done, or I should say most of the legal work has been done. At that point, you have signed all of the deeds, anything that you need to sign essentially, and you are ready to commit to buying the property. So exchange of contracts is the date that you are legally tied into buying the property. If you were then to pull out as the buyer, you could actually lose the deposit amount that you pay. Now, when you exchange contracts, this would be the earliest that you'd want to give notice on your tenancy agreement. If you did that before you exchange contracts and then the purchase falls through, so you don't actually end up going ahead with it, then you would have already given notice on your tenancy agreement and then have nowhere to move to. So of course, definitely not a good idea to give notice before exchange of contracts. So make sure you exchange first. To mention as well, if there's a big gap between exchange of contracts and completion, so say 2 months, for example, then obviously it's important not to give your notice on your tenancy if your notice is 1 month, of course. This is when you'd actually pay some or all of your deposit, depending on how much deposit that you're putting forward as well. And typically this is when you'll have a completion date set. So then you'll actually understand this is when we'll be moving into the property. Now, completion is another huge part of the process. And this is the part that you've been going through this whole process for. And that is to actually get into your first home. This is the most exciting day and even for me really, is to see clients that I've been working for months and sometimes years to get to the day where they actually move into their first home, and it is a great moment. Now, completion, so how does this even happen? Obviously, the money's got to change hands. Yes, you've got a mortgage offer document. Yes, you've got some money in your bank account, but how does this actually happen? So your solicitor will actually transact all of the money over to the seller's solicitor. Your deposit will go into your solicitor's bank account. The mortgage funds will get requested and they will go into the solicitor's account, and the solicitor will then pay that over to the seller's solicitor. They will then, of course, deal with the money, how it needs to be dealt with on that side. This is where the transfer of ownership really happens. You will then be completed and the legal owner of the property. This is also when stamp duty in England would be paid on the property, and that needs to be paid typically within 2 weeks of completion. Normally that's something that you'll do through your solicitor as well. Now this is, of course, as I've said, when you'll be moving into your new home, so it's a really exciting time, but a time where there's a lot to think about as well. Moving into that is what you actually need to think about when you complete on your first home. A really important thing actually needs to be done just before you're moving in is making sure that you're registered for the council tax, the water bills and all the utilities, getting set up for that correctly. That's a really important point, particularly the utility bills. Built up your credit score to get here. Now, it's really important when you change over, especially if you're renting before, that you do that properly, because I have seen in the past people not change over their utilities properly and then they end up getting a default or a missed payment or something like that. So just one to be careful of. Now, that comes into some of your homeowner responsibilities, is making sure that you've done that properly. Also, that you keep up with your mortgage repayments. Of course, it sounds like an obvious one, but it's important to make sure that you don't miss any of those. Looking after your home, of course, there's no landlord to call on anymore, so that's something that you'll have to do and things that you'll have to fix. So it's important that you get those done swiftly. And just making sure that you've got all the correct insurances in place, because the last thing you want to do is leave yourself at risk of anything bad happening and you not being able to keep your home. That really leads into long-term financial planning. That's where the insurance, keeping up with your mortgage and growing towards the future really come into it. And that's where starting to think about what's next might be part of your considerations from there. Overpayments, this is a good time to have a reminder, and a time that I always remind my clients is that yeah, it can be a good idea to make overpayments. Remember how much money you might be able to save if you do that over the next 30 years, for example. Now, you've come to the end of the process. You've set everything up. You're in your new property. You're glad it's over, I'm sure, but you're super happy. Maybe you're in your first home with your family and enjoying it, getting that first takeaway, maybe inviting friends round and cooking some food. That is what it's all about. I wanted to give you just a couple of common challenges that I see and a top tip as well. One of the main challenges or problems that I see is that people just don't take the time to really think about what they want. Maybe they've decided, I want to buy my first home, but they haven't really taken the time to think about what they actually want from that. And that can really shape what type of property and the process that you go through. So it's important, I would say, to spend some time thinking about what do you want for you and your family when buying your first home. The second challenge or mistake that I really see is not speaking with a specialist advisor early enough in the process. If you've got your deposit together and you're thinking about starting to view properties in the next couple of months, it is definitely time to speak to a specialist advisor, someone like myself who can talk you through the options, make sure that you've got the right provisions in place, the pre-approval that we mentioned, and that you've got the options ready to go ahead for when you found a property. This will just help you to avoid disappointment and make sure that you're really getting the best thing for you. The third challenge or mistake that I see is not moving funds over to the UK 6+ months before buying. So if you've got funds that aren't in the UK and you're looking to buy it here, put your funds into the UK, make sure that you've got proof of them being here, and it'll be a lot easier to prove your deposit to both the solicitor and the mortgage lender when the time comes. So my top tip is really distilled into this one thing. It is get the right advisor and solicitor in place to ensure that you've got your power team. It is so important. And if you've moved to the UK, especially in the last 5 years, let's say, to have an expert or a specialist that works with just people who have moved here in the last 5 years is massive, because it makes sure that you're speaking with someone that really understands this part of the market and understands the options available, but someone that also has the experience and the relationships to process the mortgage and take you through the process to make it as easy as possible. Now we've come to the end of this video and it's been a long one. If you're still watching this with me, I'd like to thank you for listening in and taking down this information. If you've been through this video, I'm sure you're going to be able to go through this process a lot easier than if you wouldn't have watched it. And hopefully this can help some of your family, some of your friends. So please do share this video if you found it helpful and you think it might be of interest to someone else. Now, to recap just the main points of the process, to maybe simplify this in your brain, as early on in the process, you want to be thinking about what you can do with the 4 key areas. So you've got income or affordability, so income versus expenditure. You've got credit score, so can you build your credit score? How can you do that? You've got deposit, so thinking about building your deposit, saving that up, using stuff like a lifetime ISA, savings accounts, etc. And then time that you've been in the UK as well. So of course, if you've just moved here, sometimes it might help to wait a bit of time since you've been in the UK, but really the best way to understand that is speaking with a specialist advisor. Once you've got a pre-approval in place, you can go out and view properties. Once you've found somewhere, you can ask the estate agent to make an offer. Once your offer is accepted, then you could submit the mortgage application through your mortgage advisor. They will then process that, hopefully to the point of getting a mortgage offer in place, which is valid for 6 months. From there, you would then exchange contracts once all of the legal work has been completed, and then you would complete, which is when you get the keys to the new property and when you move in. Look, I know this process seems long and hard. I know if you've moved over from a different country into the UK, it might almost seem impossible to buy your first home here. But I promise you, from working with tons of clients who have moved to the UK, I know that it is possible. And I know that there are more options than you currently might believe. Maybe you've been told by a bank, a friend, another advisor that it's not possible. But it is, and it can be, and it certainly could be possible for you. So keep up. If you're saving up your deposit, keep going. If you're building up your credit score, keep doing it. And if you're almost ready, definitely reach out. I would be more than happy to help personally. If after watching this, you'd like some of my advice, then I'll leave the booking link in the description below so you can book in a session with me, and you can also download the free guide if you're a bit earlier on and you would like to do that instead. It's been a pleasure. I hope you've enjoyed this video. Click subscribe below and hopefully see you in the next video.